know AMC is going to fill that gap, right? You know AMC never gonna squeeze, right? You know Adam Aaron just used you guys to just line his pockets and sell, right? Hey, what's going on, guys? Welcome back to Way Up Trading. Now, today we're going to be taking a look at some of the charts, take a look at AMC, how we had that nice rebound recovery, as well as a few other things right after this.
Oh, snap.
Oh, man. Today we're going to be taking a look at some of the charts today. Had an amazing recovery day after the Biden talk.
Say that again.
About the debt ceiling and the fears that were surrounding that. Things are looking positive right now, and the market's looking like it's making its way back up to the levels that we had in mind for the past few weeks now.
It's tech stocks!
Helping AMC move forward towards the levels we know where it's supposed to be at. Gonna get a couple of updates on short interest data, some of the tactics they've used in order to suppress the price, and where do I think it's going in the next few weeks, and then some. Stay tuned. All right, I got AMC pulled up here on the 15-minute time frame just so we can get a look at how things move throughout the day. And taking a look here, you can see that we had a lot of continued downside after the drop yesterday. Earlier this week, we continued to make a fall. We actually lost this uptrend that I thought we were going to hold on to, but things actually wound up playing for the better, which created a spring region and pushed us back above where we closed roughly at about 510 today. Now, what it's looking like, if I move a little closer in here, it looks like we're going to actually probably play out a nice inverse head and shoulders pattern in order to move this thing back toward the upside. You can see once we went ahead and tested this macro downtrend, which is a downtrend of a descending wedge or falling wedge that we've had here. Was expecting this to potentially bounce off of this area here. I have this yellow line, which I'll show you in a minute. This is the downtrend of the super macro descending broadening wedge that's been in place ever since the beginning of AMC's inception. Now, I was expecting this to potentially start to bounce somewhere around there if we didn't hold this $4.92 or $4.90 position that I had called out on Twitter. Now, if you're not following me on Twitter, make sure you go and do that as soon as possible. I post high quality plays there, as well as some updates that I see on AMC throughout the day. But what I expected here was a potential bounce and double bottom setup or W setup here if we were to break through the falling wedge top here, this red line. And we did get just about exactly what I was looking for on that end. I did mention on Twitter that if we did break that area of the 492 and didn't get a chance to play this larger double bottom, that it was a high possibility that we would break through and start to go and test the super macro descending broadening wedge, which is somewhere around the $4.71 mark, which would be this yellow line here, as well as this green uptrend line, which I'll show you soon, a little later on, which is the uptrend from the lows of the lows at $1.17, followed by the more recent low, about $3.75, somewhere around there. And this uptrend, there's a nice confluence here that would have played as a major support if we were to go that low. But it looks like we got a nice bounce and reversal here, starting to make our way back up, broke above the 50 moving average on the 15-minute chart, which also looks pretty good on the daily chart, which I'll show you later on. But right now, it looks that things are starting to turn around. We got a nice influx of volume here. Things are looking on the up. But I do expect us to come back down, being that we did close below the 516 mark, which is what I've been looking for in order to start playing more toward the upside. So I expect us to possibly come down one more time and retest this breakout, or at least retest this 15-minute or so 50 moving average before making another push back toward the upside. Some more reaccumulation needs to be done, most likely here, in order for it to build up enough liquidity to start to push toward the next levels. And this is pretty common when you see these things happen in stocks. Now, I know a lot of bears online have been predicting the possibility of going to go and fill that gap at $4.30, $4.08 to about $4.30. I think right now, the way things look, it's pretty much off the table at this point. I do believe we'll start to reverse from here, and I'm expecting us to most likely start to play the 525 mark, hopefully by the end of this week, and moving into the 535 and 550 mark by the beginning of the coming week. So do pay attention. If you're in calls, I would suggest to play them a little closer to the money and further out dates, because this is moving extremely slow because of the idea of the delays in volume. But we do have on the bright side, there is a big influx of buying pressure that's happening throughout the markets after Biden today walking in and giving us that short speech on what he thought about with the debt ceiling, which is a huge plus. The markets began to rally today. Things started to move on the up and up. QQQ went crazy up to about a little bit over 330, 331. SPY obviously went above and beyond and hit somewhere around just underneath the 416 mark. Crazy tear. Congratulations if you caught any of that play. But we did start to see AMC top out with the GameStop run that happened earlier today. GameStop obviously has been on the tear for the last few days. And I mentioned on Twitter also that GameStop is what's going to pull this thing forward and at least open the doors for AMC to start to move up, meaning that a lot of the companies that are short on both of these things. So if they're hurting on one end,
Squeeze, squeeze, squeeze. Oh, poop.
the door's going to open up for AMC to start to make its move, but we'll see how things continue to play out. All right, so here's a look at the super macro descending broadening wedge from the beginning of AMC. We've gone over this a couple of times, but it's always good to get an idea of where we are. And again, as I mentioned before, and also I've also mentioned on Twitter that anything that's being purchased and being done within this region here, underneath $6.13, is simply a reaccumulation and a retest of the super macro descending broadening wedge top, which is the top of this yellow line here, where touch points have been pretty consistent before squeezes. Now, a test here, we're going to zoom in. I have it circled here so you can see it a little better. A test here of this line would have been possible. It may still be in the cards. We're not completely out of the woods yet until we break back above $5.16, in my opinion. Once we break back above there, I'd say that we're pretty much in the clear and we can start making our way back up towards the $6 and change mark. Most likely more liquidity was picked up from here, and now it can most likely move back to the upside. Obviously, there was a lot of decreased selling pressure. As I mentioned before, decrease in selling pressure or decrease in supply, the path of least resistance is now upwards. So they're going to move this thing back to the upwards once they got enough shares or accumulated enough shares to start to turn things around. So right now, anything underneath this region, you can see that the green line that I have here, I mentioned a little earlier, this green line is from the lows of about $1.17 and also has played and had several touch points on all the lows that we've had throughout the last months here at $3 and change, as well as quick dip underneath it with the Allegheny news or the lawsuit news, but was quickly recovered where we got that huge 40% day. But for the most part, if we did go ahead and come down, we most likely will retest that if we do lose the support that we're finding now right above that downtrend line of the falling wedge, this red and green line setup you can see here. If we do lose that, we'll most likely start to see a retest of this uptrend and then turn around from there. Again, the confluence is there with the descending broadening wedge off of the super macro chart. But like I mentioned before on Twitter, you can see that we now are forming between 613 and this uptrend. We are forming a ascending triangle setup, which basically is going to start to play toward the upside and look for this potential break. 613 is a huge level. This is a macro spring that we're looking for, and every time you get a retest of a descending broadening wedge, as we've gotten in the past, we've got to squeeze.
Short the stock, long the stock.
Now, I'm not expecting this thing to go to all-time highs anytime soon. I do see this happening in the future. However, I can see most likely if things play out well and we start this turn around from here, this descending broadening wedge that we have on the more near term is looking like it's getting closer and closer. We may be looking to break this thing going into June. So if we do break it into June, I can see very quickly us getting into the area of about $9 to $10, probably by mid to end of June. That coincides here with breaking the 200 moving average on the daily, as well as getting above the smooth moving average on the daily chart as well, which is roughly right about the $8.78 mark, and then go ahead and touch this midline, which is the major midline that we've had in place since the beginning of AMC on the broader bull channel. This would line up with this orange line, which is the 400 moving average right here, which is roughly at about $9 and change. Now, break of the 613 mark is going to bring us, as long as volume supports the move, and lines, it should line up with a lot of news that I expect to be coming out by the summertime months, roughly into June, middle of June, July, and August, which I think are going to be really bullish for AMC in terms of the movies that are coming out, in terms of what's happening with the lawsuit, what's happening with the reverse split, and all of those good things in between. Everything pretty much is lining up for the summertime for us to have a nice move to the upside. I'm expecting somewhere of about a 70 to 100% move from the lows that we're sitting in right at this particular point in time, roughly about the $5.10 mark. But once things play above this descending broadening wedge, that yellow line I mentioned before, we play above $6.13, which I have as a target here. Our next level is going to be this midline, which sits at about $9.19. So it's lining up really well for the summertime. If you're in calls right now, I originally had calls for the June 16th date for about $10. I am looking to roll those over most likely to the end of the month because this is moving a lot slower than I expected in terms of the explosion I'm expecting to see. But be safer out there, move closer to the money, move further out, and I think you should be okay as far as your calls are concerned. But right now it is looking really positive. We got the change in behavior I'm looking at. Volume is still relatively low, but we're going to see how things play out with the pattern that we talked about, the inverse head and shoulders. If things go well on this thing, I can start to see us move again back towards the 550 mark in a flash, probably by the beginning of the coming weeks. Also, go and follow me on Twitter. I do post a lot of high quality plays there, as well as my insights on what I see with some of the favorite stocks that we have, GME, AMC, and other ones that we play options on. So do go and follow me on Twitter, and we're going to be talking to you soon about what's happening next year with particular stock. Also, if you're trying to learn some of the basics that we use in order to play some of the momentum trades and stock picks that we take, I have a link here for my last video, which will basically show you some of the key techniques that we use in order to play the momentum trades that we take throughout the day. So go ahead and watch this video here, and I'll see you in the next one.